Okay, wonderful. Welcome everybody to our panel and to our discussion here. Really looking forward to it. The title I gave this is basically the state of the VC ecosystem. So I want to talk with my guests about the latest trends in venture investments. And I'm really happy that you took the time to join me here and discuss hopefully a few very interesting topics. I mean, as you know, also not only startups are innovating and need to adapt to what's happening in the industry, but also the investors are affected by many different trends at the moment. So you hear about those mega funds, obviously, like Softbank or Tiger Global. You hear about that all the deal making is now super fast and remote, and basically even faster and quicker than before. You have new financing types like crypto, for example. What happens of this? You have this topic of totally new like industries who are going now for venture funding, be it climate, green tech, or space, or whatever, that also we haven't heard about in our industry 5 years ago. And not at least that also the club of investors are trying or is tried to be broken up basically by new people coming in with more like diverse backgrounds. So a lot of different topics that influences the venture industry. And for you as founders who are in the audience, maybe I think this is quite relevant for you to understand what's in the mind right now of your potential investors. So for this, I've invited three people who I know for quite some time already, and I thought it would be really interesting to get their input on this. First, just quickly, for those who don't know me, I'm Florian Steger. I am the managing director of the hubraum fund. So hubraum, obviously, you know, but we also have a fund where we do seed and early stage co-investments into companies that are strategically relevant for Deutsche Telekom. I've done this for close to 10 years now, but I also have been an entrepreneur for 10 years before. So I know a little bit of the pain and gains of both sides. I also have here in my round with me, let's start maybe with Rouven. Rouven Dresselhaus, he founded the Berlin-based VC Cavalry Ventures in, I think, 2015, right? 2014, 2015. Now running his second fund, around 120 million under management. Quite known companies, for example, McMakler, Fortro, Planetly. And I just looked it up. You really have been on fire this year, right? So at least in my database, already 12 investments only this year. So good job here, and I'm looking forward to getting your input on our topics here. Then we have Andreas Unseld, also well-known figure, and we know each other also, I think, for 10 years or so already, with the Munich-based VC fund Unternehmertum, or I guess you are now called UVC, or like, I don't know.
UVC yeah? Partners.
Good, okay, perfect. Active for 12 years now, third fund generation. I know you mostly from your like high-tech investment focus, but also known for investment in companies like Flixbus, Konux, so also recently a company called ESA Airspace, if you know them, where I'm quite interested in to get to know a little bit from you what are the logic and reason behind an investment like this. And then last but not least, very glad to welcome Cynthia. She is the founding partner of a new seed stage fund called Lucy Capital, but was previously a very active angel investor, also board member of S2S, which is the first Swiss student-led venture fund. And her topics are the ones that I think we also need to discuss here, especially investments in sustainable systems, topics like health and well-being, and also what you call nicely power to the people. So looking forward to talk about this as well. And then also to our audience, obviously you have the chat. I will reserve 10 minutes at the end, maybe also to questions from the audience. So please either put them in the chat, or you have the possibility to also be part of our round here with audio and video for the last 10 minutes. Okay, so what I would like to start with is actually a question to every one of you. You've been active in this industry for quite a while. What has really changed, in your opinion, in the last 5 years? So what is different now when you go to work every morning than if you compare this to, let's say, 5 years ago? So maybe we just collect a few topics that come to your mind, and then we can go into detail on a few common themes. So who wants to start? Maybe Cynthia?
Mm-hmm. So, you already mentioned a couple of topics that are relevant, and I will maybe start with from our perspective as a VC. So I would say one topic is really that it gets more competitive than 5 years ago. I think you mentioned it, more funds are entering, also early stages, more Series A funds are opening up scouting programs and are getting earlier in the funnel, right? Or we see a lot of, in Switzerland, you see a lot of UK funds and US funds that really, I call it, throw money on the really early stage companies without even having a clue or doing any due diligence, but offering really competitive terms. And that's one aspect. Another aspect is definitely that also the VC industry has understood, okay, due to this competitiveness, how can we make sure that we still see, let's say, 90% of the deal flow out there? So they're trying to automate their own deal flow, their sourcing strategies, etc. And of course, everything is more remote. That makes it easier to kind of tap into new markets, into different geographies, right? And on topic-wise, of course, we are now. Every kind of decade has different topics, but this one is definitely the climate change decade. And we see more daring VCs, meaning a few more that are also investing in hardware or in topics that are more scientific, deep technologies that are really spun out of university. Still, there is little, but I would say that there is the first signs of really, like, I would say, long-term capital going up.
Mm-hmm. Thanks. So Andreas, if you hear that, do you have the same experience, same topic in mind, or something completely different?
Actually, I can only add to this and second it, that are exactly the trends. Maybe one thing or another perspective on the question is there probably too much capital is flowing into the tech space? Is also that when I started venture capital, like financing a young team meant providing them, I don't know, 500K, and people were quite proud when they were able to raise 500K. Honestly, with 500K, you can't build a lot. Sounds a lot for a private person, but for a company, it's just not really a lot. Nowadays, we've seen seed rounds, for instance, together with Cavalry Ventures just recently, LF Alpha, seed round, basically pre-product company, but 23 million in funding. And that gives a complete other momentum into those companies. And what I think, 10 years ago, we dreamed that we could basically reinvent parts of our industry. Now we are really doing this, and we have the funding, and the funding is really also competitive to the funding a large corporate could spend in a certain development. So after all, I think this is a really, really good trend, and currently the entrepreneurship friendliness and environment have never been as good as it is today.
Okay, so maybe Rouven, if you add to this, and Andreas just mentioned your joint investment. Where does this come from? Is this purely the nature of competition? If there's so much capital, then basically the rounds get higher. Because I remember that actually 5 or 10 years ago we said, okay, you don't need so much money anymore actually to start a company. You don't need to build up a huge park of computers or buy expensive licenses, because you can have everything in the cloud and everything is free and open source. So you can actually start a company with 500K, and now you see more and more seed stage companies getting financed with, I don't know, 10, 20 million. Where's this coming from?
Me, Florian?
Yeah.
Okay, cool. First of all, maybe on the trends, it's a beauty of speaking last. Don't have to recite anything, but just second what has been said. Just like what to add, maybe a couple of more points, and then we can decide whether we want to go deeper here. You also see more super angels in the ecosystem. So the first and then second generation founders that have made complete or partial exits, and because they are so interconnected, and also an increased professionalization of the whole ecosystem was happening over the last 5 years. That's amazing. So typical tickets, and maybe now to your question, Florian, from like an angel ticket of 25K when I started, now you see angels that can easily invest like 250,000, so like 10 times the sum. And also continue over the long term. So I think this is really, really great. And also, the power balance shifted, from startups to VCs. It was back in the days, the VCs and the startups. Now it's vice versa. So VCs have to make compelling offers to get into the best deals. And maybe one more point. Seconding on what you said, Andreas, and if there's too much money in the ecosystem, I believe that we are currently at an inflection point. So the last 10 years of post Lehman venture were just like the prelude. But what we are seeing right now is an absolute exponential growth across so many industries where startups are active. So I think the next decade or two will be the absolute gold rush for European tech. And if you look at all the money, you can take Aleph Alpha, for example. They just need the cash because there is so much on top of that plug and play stack, where, as you say, Florian, companies can kick it off very easily now compared to 5 years ago, where it was rather difficult. Build your own, or 10 years ago, like build your own tech stack, right? But what's happening right now? So the main tech stack is there. On top, amazing technology is built, and this just needs a lot of manpower and resources.
Okay. And then for you, Cynthia, as someone who with your fund wants to invest like really early stage, right? And in seed stage companies, and I guess I'm not playing the game of being able to pay the highest ticket, basically. So what does it mean for you as a seed investor? Is it still like possible to fund a company in an environment where you see those multi-million financings even in early stages? To start a company with a few $100K from angels or from a seed investor?
Yeah, I still believe that despite all the, let's say, the trend to the bigger rounds and so on, I think there's always a room for co-investments. There's always room for funds that specialize in certain areas that really have a USP in their area, right? In our case, we really are, we have a very diverse network ourselves. We are female-led, and we have experience in founding companies and in exiting companies. And I think that is very important, that you really have this USP. And I think because we are so remote now, it's even more interesting at the early stage to be close to the founders. So I think personally that local ecosystems become even stronger, so relations become even stronger.
Would you also recommend this, also listen to everyone, obviously, recommend this to the founders? So in a world where you basically have the feeling you can go fundraising everywhere, right? And you have investors from the US and China or whatever, to have a bigger focus on those local relationships, because in the end that might pay out?
Definitely to really segment those investors and try to really find those that are really helping or supporting you in a certain way, right? With your business model, in your particular problem-solving area. That I think is definitely important. Because there is abundance of capital out there, I think it's more important that you kind of connect with the right investors and that they really can support you in a certain way.
Did this change somehow for you, Andreas or Rouven? I mean, I remember that basically Unternehmertum obviously have those strong roots in Munich and that area. You, Rouven, this Cavalry, like very much Berlin-based team so far, and your network. And now I see investments more or less everywhere, also from you guys. Was that only because of Corona and now deals are done remotely, or what's the trend behind this?
I think generally there's a professionalization of the whole entrepreneurship ecosystem. So 10 years ago, you were told just do deals where you could be in at least or at latest 1 hour drive. I think that doesn't hold today. Today, I think what teams are more looking for is access to capital, access to markets, and access to knowledge. And if you can provide that, basically, it doesn't matter if you're based in Munich and the team is based in Paris. But still, I think there's the tendency to, or I don't have a statistic, but I would believe that most of the deals are still done in your close environments. For instance, we as a fund, we invest into whole Europe, but we believe that we will deploy we have now roughly a little bit of above 200 million. In the third fund, we will deploy 70 to 80% within the German-speaking region and the rest in the rest of Europe. Fourth fund, but I think the trend will go on, will maybe be already 50-50.
Seconding everything that has been said, and adding here that, in our experience, we see a big convergence of the European ecosystem, and the proximity is just increasing. So we have been active like 60% outside of the German-speaking countries over the last 2 or 3 years. And that's an increasing trend. I think why it's increasing also because the way we are set up. So we partner a lot with angels, and we also have angels that are abroad who are like well-known figures in their ecosystem. So I can always recommend every founder to talk to angels first and to the very, very first pre-seed funds, get a check from them and then make sure that they can support you to the next stage, because the trend you're seeing is that more, the old funds, the ones that's been around for 2, 3, 4, 5 decades, has grown so immensely in size, and it's so easy for them to write a 2-3 million euro check. But then again, you have to ask yourself, even though there's a lot of scout programs being set up that Cynthia that you mentioned, or even early stage pockets that are being set up, it's still in our experience a different ball game, because when you're a multi-stage fund and you have 3 billion in one fund AUMs, and you are investing 3 million, then okay, that's 1 promille of the whole fund, compared to if you take a smaller fund like all of us here in this panel. For us, the 2 million check is already meaningful compared to the AUM in the portfolio. And from the feedback we get from founders is that this generally holds true, that from you get more bang for the buck if you then take an early stage fund, because they have to work a lot harder in your favor to make things work.
Maybe just to add something which is always very important for me, and this is not going against the large funds, they're all professional and they're all good, but one must understand their game. So if, I don't know, Excel or Index is doing a early stage 2 million ticket in Berlin, it's just scouting for them. And the huge problem the founders is having, yes, of course, if they're skyrocketing from day one, that's not a problem, and they will get the follow-on round from the Index or Excel. That's why they're doing the scouting. But if they're not that fast, and let's face it, that has not changed. I mean, startups are going through ups and downs. Basically, their cap table is ruined by day one, because Index is then not following up. It's just not their business, because their main check they're writing at Series A earliest, and then that's a 10 million plus check. And if they're not able to write, they just won't follow on. And then people need to seed funding in the typical market and say, well, Index already invested, and everybody will ask, okay, if Index is not following on, why should we? And I've seen a lot of deals that had been burned that way.
Okay.
And to drive Andreas' thought further, what's like happening, or why is this happening? You know, and in my opinion, it's because they can, and because it's easy. Yeah, you know, with the brand name, deploy little sums. And also in a way because they have to, because you know many of the growth funds still haven't adapted to the changing environment of like a Tiger Global, for example. You know, they introduced a new era of venture investing, and then everybody who comes to me and says Tiger is doing stupid decisions and spray and pray, I say you haven't understood Tiger's playbook, because Tiger's playbook is so that they, before the first contact of a company, already did so much of due diligence in depth, including highly paid customer talks, you know, of like the startup clients, and that once they knock at the door, it's pretty much a sanity check on the founders, a sanity check on like the books, yeah, what's like in there. So our company that got funded by Tiger Global, you know, then the next day they got invited to like upstate New York to meet the two founders privately. They took an hour, and then a check was written. So this environment you can just do when you completely put all your processes, automation, Cynthia, that you mentioned, yeah, outbound research, have the armada of people in-house as well supporting that with, I mean, that costs a hell of a money, right? This game, I believe, is the future of venture investing, and we will see quite some large players without a clear profile struggling to compete with the Tiger in the future. And I think for a founder, that's a fantastic situation you can be in, because you can choose from whatever you want. Okay, Tiger is hands off, so they never take hot seats. You can talk to the Bainies for like support, but that's pretty much about it. And so if you already have the growth funds on board, or even if it's not even growth funds, neither just a board that adds for you enough value, then just to fuel your company with like Tiger money is best you can do. I mean, if that existed 10 years ago, God almighty, where we would have been today, you know?
Okay, but I mean, if I understand that correctly, so basically, I mean, if I mix that, what you are saying with what Andreas is saying, yes, you might be able to get those investors, but they might not be the best investors to get at a certain stage, right? Because they are basically so hands off when it comes to the next financing round, and you are not performing like your plan or their plan actually has been, you are simply left out. So, but I mean, what does this mean for funds like yours when it comes to scouting? I mean, if you basically say you can scout more or less everywhere, right? So it's not a strong regional focus anymore. Do you then go more by topics? I mean, we always have this discussion between, let's say, the opportunity-based investors, like I see now you explained this Target Global, right? That's totally opportunity-based. They research the opportunities really well and do then the investments, but basically they don't care what they invest in. And other investors who are more driven by their own strategy and hypothesis and belief in certain markets or topics. So how do you also personally scout now for the relevant companies? Is there more specific topics you're looking at?
Give you maybe a real life example, also connected to why early stage is still somewhat less prone to those attacks from a Tiger, because you don't have that many data signals in early stage companies. We invest as early as possible, so often pre-revenue. So there are no real signals other than tracking founders, which we also do. Who has been at a great position in the past, who will found a new company, like on the outbound. So there in the early stage, still there's a lot about network ultimately, and like a bit of outbound. And you know, the networking part, it's, you know, in our case, both thematic and then opportunistic. You know, the way we're structured, we have like 200 prolific figures of the European tech scene as LPs in our funds. So whenever a founder talks to those angels, you know, often we see the deals then, and there by nature, you know, a founder talks to an angel, angel talks to the pre-seed investor, then you are already in the hottest topics, because the founders choose the hottest topics ahead of the trend, and that works for us really, really well. So as a founder, I shall say, find the right angels, find the right super angels, get the right pre-seed investor, and then already you will, with the seed round, enter the, let's say, automated outbound landscape of like the Excels of the world, that knock at the door just out of the blue, you know.
Yeah. So Cynthia, I mean, in your introduction, I mentioned a little bit the topics you are looking at specifically for Lucy Capital. So how did you come up with those topics, and how do you specifically try to figure out what are interesting companies here? Are you still relying mostly on inbound for this, or are you going, like, I don't know, like, how do you research companies in a topic like, yeah, like power to the people?
Okay, so I founded, as I said, I founded this first student-led investment fund in Switzerland, and we are very very close to the universities and the spin-outs of the universities. So we know very much what is driving new technologies at the university level. So that's actually one aspect that kind of helped us to form our thesis in the fund. And the other aspect is also, I mean, and the deal flow, of course, what we get as individuals, right? And also a bit more into our, let's say, a network of LPs and advisors that are really applying those technologies, right? So that's a combination of both, and a bit of where we see the next big industries building, right? So in general, adding to this, we don't want to focus on pure tech investments, so meaning into the next battery technology or something. But what we like to do, we like to accelerate the usage of technologies to bring about a higher productivity change in Europe. If you look at the productivity figures in Europe, we are not really adopting technologies, right? That's a problem in Europe. We have a real problem with that, right? We have a lot of nice technologies, but there is no real scale up of those technologies.
So it's more about how to apply, basically, not existing, but technologies to certain problems, to certain markets.
Yeah.
Okay. I mean, so Andreas, it's really fascinating for me to see that a topic that I mean, 5 years ago, if you would have told anyone that you would invest in a rocket company, right? People would tell you are crazy. Now that seems to be, like the new hot thing, that everyone wants to do something in space tech and whatever. So you did investments in that area, like a little also like provocative. Like, do you really know what you're doing there? Because I mean, there's no real blueprint for venture investments in such industries.
Yes. So I think there are some funds that claim mainly experience driven. So we know how to build SaaS businesses. Let's do SaaS businesses. We are also doing SaaS, for instance, but we see that quite critical, but because there is where the overvaluation comes in. Everybody's basically fighting for the exact same founder profiles and deal profiles. So that's typically not the game we want to play, except that when we see, and that holds for every deal, and that's the answer to your question, if we can understand it, if it's good, and if we can support it. So basically, ESA Aerospace, we really deeply looked into the technology. We are closely associated with Munich. The technology was developed there. We saw a strong track record of the team. We really did understand, because there were a couple of rocket companies out there. and you really need to understand what's the technical differentiation. So we did understand it. Then we thought about, can we support it? And I mean, we have a huge industry network behind us. A couple of them are invested into us, but a more broader field is just supporting Unternehmertum. I think that's probably for entrepreneurs the largest industry network you can be in. And there we discuss, can you develop this part? Can you support them there? And so on and so forth. And then we have sort of a playbook for a certain deal. And then we say, okay, do we take the risk or not? And obviously we knew that building a rocket is high risk, really high risk. But we do other high risk deals. Alpha, probably same thing, high risk. But we in Unternehmertum have a department with more than 60 people that are only doing artificial intelligence and supporting German industry to develop our AI projects. Of course, we already discussed with them which clients do we have at hand where we could connect them once the product is ready. And that mitigates a lot of risk. And that allows us to do also outlying deals. And honestly, our current fund performances show that this approach is working.
Cool. Yeah. Does this also open up the space a little bit for new founder types? Because I could imagine that looking into new topics and industries and coming with that are also new ways of building up a company. Obviously, you build up a rocket company completely differently than you would build up a SaaS company. Do you also invest then in other types of founders who previously would have not been able to get venture investment?
Yes, definitely. I mean, if you look at a couple of our founders, these are not those extroverted 25-year boys that are from WHU, but maybe the 30-year-old scientist. What we would hope for, honestly, is that we also attract more female founders, which we barely don't see in the technical region. So if there are female founders out there doing tech, please contact us. We really would love to work with you. And I think that's a thing that we all need to support, because basically we are lacking 50% at least of what we could achieve if women are left out of entrepreneurship. And that's basically also a thing that we also as UVC partners are engaging, but whole Unternehmertum is really engaging, is this trend becoming or getting more women to go the entrepreneurial way.
So, I mean, besides talking about it and mentioning it, and I think that's a huge topic at the moment, what's really something you do about this? And I will not ask Cynthia, obviously, about this, but maybe Rouven first. Are there any specific activities that you do to, and it's not only about women, right? It's about having a more like diverse field of where the potential founders are coming from. Did you change something in how you look for deals to have better results in this?
Yeah, definitely. So we have been involved in the female community, loosely for quite a while, and then structured since a while. So basically, what we do, and then later I tell you why we do it. So we would like to get more female representation, both in the VC landscape and among founders. We are filing the next vacancies at Cavalry with women, and we also did so over the last year. So for example, our investment team got complemented by a female colleague. Also, the newly created senior legal counsel person who is joining already brings along also a network in the female founders community called Venture Ladies. That we also support then going forward together with Eva. And then also, we support initiatives and organizations for the advancement of women, such as, for example, female founders from Austria, or like Google for female that we also support. And of course, it's clear it's a long process. We don't attract women overnight, but you have to start somewhere. And in our point of view, it's based mainly on like two pillars. So on the one hand, education, very, very early, both at university and already at school even, where entrepreneurship must be a familiar concept at a very, very early age. And then the second pillar is female role models. Yeah, here we believe that us as VCs, we can perhaps also source more female founding teams much more consciously. And the same, I think, applies for like other levels of diversity, such as like, you know, social background, age, education.
Okay. So Cynthia, coming to the next part, but taking this into account, basically looking ahead a little bit. So if we will meet again, and I mean, I hope we will meet sooner, but if we meet again in the same round in 5 years, let's say, and look back on actually what has changed since 2021, do we believe that for example, what we discussed right now, having a more diverse founder landscape, will this really happen, or is this a challenge even for, let's say, the next 10 or 20 years?
I feel still like a challenge, honestly speaking, because there are first signs that there are, I mean, that not many, in the end, not many funds. I mean, in the DACH region, I think there are 8 female partners, investing partners out of around 30 funds, or in 30 funds, which is very low. And the problem is, I think that most of the female that look for a partner level job, I mean, first of all, there needs to be a partner level position open. And then if they look for it, they are maybe the first, and then maybe the environment and the culture that is in the team currently is not really very, let's say, fitting to this female, let's say, female attitude. So that is a problem. That's why we see more female-led VCs that are being founded. And on the other hand, I think there needs to be a structural shift. And we see also there new initiatives. So the European Union is actively thinking about allocating money to female-led VCs, to really like allocating, reserving an amount. And also, I think on the LP side, we have to do a lot of work to get these buckets also structurally differently allocated, right? To more women, female VCs, female-led founders. So this has to be done, I think, on a more structural level. Otherwise, we will have a long time to see any change.
So it looks like sorry, yeah, go ahead, Andreas.
Maybe only to add to this, what is, I think, really important, because honestly, we also were searching for a long time for a senior investment profile female in our fund. And it's really hard to find on the market because there's so less educated talent. So we really all need to attract women to start their career in VC, so that in 5 years from now, we have this talent on the market that we can then also bring into more senior and partner positions.
So that looks like we have a lot of long-term topics and problems to tackle, right? If I think about that topic, if I think about the industries we mentioned before, I mean, in 5 years from now, I hope we have a few more good rocket companies, but still, it's still a long way to go. And also, if I think of topics like climate and green tech, these are all really, really, really long-term topics. So what do you expect to have the biggest change in 5 years from now, right? If we wake up now, and I think we would be quite surprised if we would have slept over the last 5 years, what is actually how the industry has changed in the last 5 years, and not only because of Corona. So if we go to sleep now and wake up in 5 years, what would your guess, what would we be really surprised about?
You mean in terms of how the landscape would change, or which tools we would use, or the way we work, or
like everything that basically affects your business and your day-to-day business?
Okay, so how we work day to day.
Yeah, it could be that a completely different topic is coming up and you think this is still missing, right? Or, I mean, for example, what we did not talk about at all, I know 3 or 4 years ago, everyone was talking about crypto. And like crypto still plays a huge role in like with NFTs and this kind of stuff. But again, 3 or 4 years ago, everybody was telling the VCs, you are going to be replaced by crypto funds and this kind of stuff. Not a lot of serious talk about this at the moment. So do you believe something will change there, for example? that really like disrupts our industry.
Yeah, I think
maybe another thought, or Rouven, please go first.
Yeah, thanks. I think you will have in 5 years, you will have a big concentration where you see focused funds in the early stage, either thematic or opportunistic, but both have really doubled down on the playbook and then really fostered the niche. Also, you will see the brand name funds still persist, of course, like Excel, Benchmark, Sequoia Index here in Europe, and then a lot of funds will be washed out in the middle, I believe, without a clear profile, and you will see a new dominance of differently operating funds, such as a Tiger Global in the future.
Andreas, Cynthia, any ideas about the big disruption in the next 5 years?
I would also foresee so that maybe the next $1 billion or Decacon will be really a company in the climate tech sector, and that I could imagine being invested also by corporate VCs, by other like pockets of money, right? Because VCs are usually, or nowadays, still like hesitant. So it will be also something that is more like finance. So we see corporate activity growing. So I think that this will be dominating as well. So you will see that.
I personally, but that's a personal thing. I don't believe in corporate venture capital, or only in certain niches, but probably not as a dominant market factor. So what I would hope what's going to change, and I think what's still missing in Europe, is also a exit market and culture. What do I mean with this? And currently, honestly, when we want to sell a deal for over 100 million, which with the increased fund sizes, we must do this, otherwise we're not going to be financially successful. Nearly all of those deals are going to China or US. So if you want to state it in a negative way, Europe is currently doing the early stage technology development for other markets. I strongly believe in a global ecosystem, and I think international M&A is really important, don't get me wrong. But still, I hope that players here, stock exchanges, as well as acquiring companies, do understand that they need to invest heavily in tech-driven M&A and really generate a large exit market here, just to make the VC scene, however it will look, then sustainable. Maybe today it's not. There are a couple of funds that are doing quite well, and the last 5 years have been amazing also in terms of exits. But if you now look at the money that's flowing in, we need to, I don't know, tenfold the exit market to make that trend sustainable, and that's really important. So I'm really hoping to see this in 5 years.
Yeah, I hope so too. So many different topics, and actually we are nearly out of time now. I haven't seen a lot of questions in the chat from the audience, but I see that my good friend and colleague Alexander wants to join. Maybe he has a question. I'll let Alexander in. Let's see. Nope, not anymore. Alexander, if you can hear us, if you have a question, just let us know. Or anyone else from the audience. No? Nobody? Okay, if not, please, like I would say, if you would have been in a real room, please clap for our panel participants. So, like, I don't know how you could clap virtually here on Hopin. But from my side, Cynthia, Rouven, Andreas, thanks a lot. Really interesting. I hope we can continue this also personally soon, this discussion. And I give back basically to the main stage. Thank you, everybody.
Thank you.
Thank you.
Thank you.